Are you someone who's thinking about or wondering if Reno Tahoe is good for investment property? Well, I'm here to talk to you about just that today. And for those of you that have been watching my videos before, you may not even be aware of this, but I am a licensed property manager and my team does manage about 100 rental homes here. So we are well versed on the investment and real estate side of things here in Northern Nevada. A lot of times I get questions about, should I buy rental property here in Reno? Should I buy them in another city? Or to go full circle with that, I know people don't want to treat their primary residence as an investment property, but if you own no real estate, you have to start there with your primary residence, and then we'll worry about building up more properties over the long haul. So a lot of the questions I get all the time is, well, what about the interest rates? And what about the prices? And is the market going to crash? And all the things that we've been hearing about for years and years and years. And hopefully we're putting out enough content information for you guys that you realize this is just not going to happen in our area. So whether you've been waiting to buy a primary residence or you already own one and you're thinking about getting into the investment game, we should have a conversation. But here's what I found so interesting about real estate in the first place. And as I sit in front of clients as they get older and we're talking about how they built up their net worth, usually one of the biggest things that they have is the equity in their house. And then if they were lucky enough, they either did some sort of company-sponsored retirement plan, or they have a 401k, or they're getting pensions, whatever the case may be. But what I can't figure out is if real estate is one of those things, why most people won't buy more than just one house. So if you look at the stats over the years, typically 2/3 of people in this country own either a condo or a home or a primary residence. So you get, 65, 68% of the country. But what was so amazing to me when we did some research on this was, of those people, do you know how many people own more than just that one property? And I was shocked because it was actually under 7%. So if you figure 2/3 own a property and only, let's say, 7% of those own a second property, you're probably talking less than 5% of the United States owns multiple real estate investments. And what I can't figure out is it's 90% of millionaires got rich buying and selling real estate. So I just think whether you want to do it in my area or some area, you need to do that. So let's have a conversation about that, and I will give you all the pros and cons about doing it here. And if your concerns are doing it in other places, by all means, reach out to me. I personally am buying investment properties in other parts of the country as well. And I own multiple rental properties here, and I own a commercial property here. So I've done all different aspects of this and be happy to have that conversation with you. So first things first, I think if you don't own a primary residence, you absolutely have to start there. You'll see videos out there about how terrible renting is. And I understand there are times in your life that renting makes sense. Maybe you're new to an area, or you think you're only going to be here for a year. And so I realize, renting's not the worst thing in the world, but it can't be a long-term wealth building strategy. With that being said, we need to get you into a real estate property. And so we need to sit down and have that conversation with you. And whether it's a condo, whether it's a house, here's what you need to know. And even if you're only planning on being here for a year or two, great. Go into purchasing that property with the intent of, when I do move in a year or two from now, I'm going to keep that. And not only can we keep that, we can explain to you what it'll cost, what your payment will be. And when you buy a rental as your primary residence, you get in for a much lower price. You only have to put 3.5%, 5% down to buy it as a primary residence. Just know that when you go to rent it, it is perfectly possible that it won't cash flow, that whatever the renter's paying you will not be enough to cover what your payment is if you just bought a home a year or two ago. So I know you see these videos all the time. It drives me crazy about, hey, I'm in my 50s, but if I were in my 20s, I would do this. And that leads me right into what type of rental property should I buy, whether it's a single family home, a multifamily building, or some sort of commercial property. Let's start with the multifamily. It is crazy to me that we're talking to people in their 20s and 30s and saying, if you've never owned real estate before, I would go back and buy a fourplex and I would live in one of the units and I'd rent out the other three. And in theory, I get it. It makes great sense. But if you've never owned real estate before, one, a fourplex is typically going to be more expensive than a single family home. And of course, they're telling you the rent collection of those other three tenants is going to help you qualify and be able to pay for that. And that is true. But if you've never owned real estate before and now you've bought a property, you've moved into it, and you're now going to manage and live with three of your renters right there on top of you, it just seems like a stretch to me that you're going to be able to do something that quickly. I'd rather see you just try to find your first property and manage that. The other thing about multifamily properties, if you're looking at that as an investment, is typically they're older. Like I said, I've lived in Reno for 35 years and been selling real estate for over 20. I don't remember the last time a duplex or a fourplex or an eightplex building was built anywhere in Northern Nevada. So you're dealing with midtown areas, older sections of the area. And when we first got into the property management business, we had a couple of owners that we were managing multifamily buildings. And because typically they're 1 bedrooms or studios or 2 bedrooms, you're getting the lowest rents of anywhere that you can get in town. And because of that, you just deal with more headaches and more problems. So I'm not saying don't do multifamily. I'm just saying you need to know the pros and cons and just know there's a lot more to them than doing a single family home. Where should I buy and what should I do? So in my market, an average home price is in the low 500s, and multifamily buildings are going to even be more expensive than that. And so I realize typically if you're buying something as a rental property, you have to put at least 20% down. I personally like to do 25% down, but if you're putting 20% or 25% down on a $500,000+ house, in my market right now, it is perfectly possible that the houses will not rent for enough to make them cash flow. So you just have to be aware of that situation where cash flow may not be happening for you right away, or you can go to other parts of the country, which is why I do a little bit of both. And I'm buying homes in the Midwest where I put 25% down, and those homes, even now at 7% interest rates, are cash flowing $300 and $400 a month. I just know long-term those probably aren't going to appreciate as much as something I'm hoping in Reno will, especially with 40 million people in California trying to get out of a lot of their investments and bringing their money all over the country. So you'll see people doing a 1031 exchange, which we can explain in another video on another day, but it's a way for them to get their investment money from there to here and not cause a taxable event. They, if they're paying cash, obviously can make those numbers work, but you might be able to buy one house here. It's possibly might be able to buy a couple of houses somewhere else. So again, just something that we need to talk about when you're thinking about where I want to invest my dollars in real estate. And then lastly, let's talk about this. The reason why and how people are getting wealthy with real estate, to me, there are 5 big things. And the first of which is leverage. So the difference between the housing market and let's say the stock market is this. I only need 25% down to buy that property. Where in the stock market, if I invest $100,000, great, my $100,000 is appreciating. But in my area, if I put $100,000 down on a $400,000 house, I'm appreciating on the whole $400,000. So I've got access and control of this property, but I've gotten to use other people's money to help me build up my portfolio of real estate ventures. And so you can ideally own $2, $3, $4, $5 million worth of real estate for maybe the same amount of money that you might be putting into your retirement accounts or your 401k. So by using leverage on other people's money, you can build up a lot more asset base that over, let's say, a 30-year plan. Ideally, all that stuff will get paid for by renters, and now you'll be looking in a much better financial situation than you would have if you just invested in the stock market. Now, you should do both. I do both, and both make sense, but it's just a way to diversify what you're doing. The second thing, of course, is cash flow. Like I said, if you buy a house in Reno and put 25% down, it's likely not going to cash flow, and if it does, it's going to be a very small amount. Where my properties in the Midwest, they cash flow right from the get-go, and when I tell people that what you should be doing with that cash flow is building up reserves, because when you own real estate, eventually things are going to happen like you need a new roof, you need a new dishwasher, you get a vacancy for 1 month. There's going to be all kinds of things you need to deal with. So you want to not take that cash flow and live on it. I just take my cash flow, build up my reserves. So one, I can either go buy another property, or two, when things do come up with the house, I'm not having to come up with money out of my pocket. It comes out of my investment accounts. Be careful what you're doing with your cash flow. It's hard to get that and appreciation on properties at the same time. The next two things kind of go together, and here's how you really build up some wealth is over time, you have two things happening at once. The renters are paying the payments, so you're reducing the balance on your loan. And over the long haul, we realize prices are going to appreciate and you're going to go up. So that spread between my loan balance and what I purchased for, if those numbers keep separating, getting wider and wider and wider, you're building up equity in your house. You're going to a lot of gurus, if you build up enough equity, will say, borrow, refinance that house, take that money and go buy another house, so you're using even more leverage. You just have to be careful, because I saw a lot of people do this back in 07, 08, 09. They kept leveraging like crazy. And if for some reason prices did back up 20 or 30% and you only were putting 20% down on these properties, you can easily start being upside down in some of these properties. So it's just something to be careful with. I do like the fact that you can then take some of that equity and go buy another property, but you might even want to save some of that equity room so that you can eventually just refinance the house and then do work to the house that you're invested in, that one day when you go to sell it, it'll be a much more upgraded version of that particular property. And then one other thing that people don't think about a lot of times is the tax benefits. I am not a tax expert. You need to sit down with your CPA or whoever does all your tax planning and financial planning and talk with them about this, but you can do things like depreciation, and of course, all the money that I'm spending doing things in these houses gets offset against the income I'm making from these houses. So you're going to have a good write-off typically at the end of the year. You need to have a good plan sitting with your CPA on how to best use some of these tax benefit features when you own residential real estate property. And again, if you talk to some of these other gurus, you'll hear them talking about the money that you're pulling out of equity of these properties is going to be taxed at a much lower rate than your income is going to be. So it's a way to make a lot more money and not to pay as big of taxes on them and go from there. So should you do this in Reno Tahoe? There's lots of benefits of doing things here in Reno Tahoe. I think our community and our market, if we all wake up 10 or 20 years from now, prices are going to appreciate like crazy. So in my market, I look at it as more of an appreciation game. And then when I buy properties in the Midwest or other parts in the country, I look at that as more of a cash flow game. So I like to do a little bit of both. One thing I did forget about is if you want to get involved in commercial real estate, that's a whole nother venture. And there's a million different kinds of commercial real estate you get into. I mentioned at the beginning that I own a commercial building, but the reason I own a commercial building is 20 years ago, we were renting space for our real estate company, and it just made more sense for us to buy a location to put our real estate company in in. We sold our company a few years ago, and the company we sold it to, they're just renting the same building. So it was not like we were out, having to have a property manager manage our commercial building, but it just sort of diversifies our portfolio a little bit so that we have a little in there. We can hook you up with a great commercial realtor that can walk you through those processes as well. I think you have to get in the game with real estate. You need to buy a primary residence. And if it was me, I would try to buy as much real estate as you can. And as long as you're holding it for the long term, you're going to win in the real estate game. So again, if you're enjoying the content we're putting out there, by all means, please subscribe to the channel. We appreciate you watching the end of the videos, and we'll see you on the next video coming soon.